You're listening to Lender Lounge with Kevin Kim, a podcast dedicated to the private lending industry. I'm Kevin Kim, and my goal is to sit down with key figures in the private lending industry to talk about their business and their personal lives. We'll get their takes on market conditions, the industry at large, and their personal stories. Overall, I really want to learn more about how they started and grew their businesses. So whether you're a lender, a borrower, a vendor, an investor, or anyone just interested in learning more about private lending, this podcast is definitely for you. Thanks for tuning in and enjoy this week's episode of Lender Lounge with Kevin Kim. This episode is sponsored by PrivateLenderLink.com, where investors and brokers find direct private lending companies throughout the United States. Are you struggling to find the right lender for your deals? Private Lender Link offers a unique service to provide private lender recommendations. Over the past 10 years, they have established relationships with many reputable direct lenders and know each company's guidelines. Their platform makes the process to get recommendations very easy. Simply provide details about your loan request by filling out a short questionnaire. A Lender Link professional will review the information and invite a few select lenders to view your loan request. The lenders will reach out to you directly to further discuss the deal and provide a quote. Save yourself a lot of time and effort by leveraging Private Lender Link's knowledge, relationships, and 10 plus years in the industry. Their network includes lenders for commercial real estate, residential investment properties, and small businesses. To get started, visit PrivateLenderLink.com and click the big green button at the top. Hey guys, Kevin Kim coming to you again. This time we're on location at the Irvine offices for Aureus. I am here with a friend and honored and esteemed guest, Trixy Castro. Please introduce yourself to our audience and we'll get started.
Thank you so much for having me. I'm super excited. And thanks for coming to our little spot here.
You drove all the way down from headquarters, so I mean, this is like a 15-minute drive for me.
Any excuse to come out here and see you guys is awesome.
I appreciate you coming down. Yeah.
Thank you. Super excited to be here.
So tell us a little bit about yourself, and then we'll get into the company.
Yeah, absolutely. So Trixy Castro, and just a serial entrepreneur, have a passion for this space, a passion for housing in America as a whole. Could be definitely being first generation here and having seen the struggle my parents went through, definitely I think was an influence on that. But created a company called Genesis Capital as well as Genesis Auctions, which became Hudson Marshall. It was a great run, had a wonderful time, and waited out my non-competes, and I'm back.
And you're back.
I'm back.
And you're back. And so we're really excited. You know, we've had about a little bit less than a year back and forth trying to get this set up. And you spoke at our conference back in the springtime. And so, first of all, welcome back to the space. We're so excited to have you. And when we heard of Aureus, when we saw you guys at our first, I think it was at the IMN show in Scottsdale, right? And we were like, the name had been coming around. I think one of your people had called us about loan documents, and we were like, we got to get to know more of these people. Went to your cabana. You guys had that little room, and I was like, just wait a minute. You're that. Yeah. So, okay. So let's get into Aureus first. I mean, we have a lot to talk about Genesis for sure. It's a story that we cannot just, gloss over, but definitely want to talk about Aureus. So, it's Aureus Financial Group?
Yes.
Aureus Financial Group. And you've returned now. You've been in operations for about a year now?
Just under a year. Yep.
Well, almost 1 year anniversary.
Yep.
Oh, man. And you guys have kind of bootstrapped and grown very quickly.
Yes.
I mean, now the team is what? I mean, you hired some pretty impressive people, and you brought back some of your old partners from your Genesis days, correct?
Yes.
So,
we're close to 65 people.
65 in less than a year. And then, you have an LA office. You have an office down here in Irvine. This is a satellite office. And then is there another office anywhere else?
Yeah, so we've got Florida as well. We're opening up Arizona and Texas. Yeah, so we want to have regional spots all around the country.
Very good. And then so let's talk about kind of the business model for Aureus. I know you guys came back to the market. The industry is completely different than when you left, right? Yeah. And so how did you prepare for reentry? And tell us a little bit about Aureus's current structure.
Okay, so Aureus, there was so much thought put into it versus the first time around, right? You're just trying to figure it out as you go. You're kind of doing this.
Right.
With Aureus, it was, what can I do? What could I have done to improve the model? What can I do in today's environment to be helpful to the industry, to the borrowers? How can I really be that debt partner to where we are today and where we're going, right? Fast forward 10 years, what's that demographic going to look like?
Right.
So really wanted to make sure I had the right capital structure and had the right capital partner. I didn't want to go back to the well. I didn't want to have capital be my constraint because in a past life, raising money was one of my largest challenges that I had.
Sure.
So really wanted to get the capital stack right, making sure that we were in a partnership, that we were aligned, that it was a global player backing me. We were able to do that. Wanted to come out with all the product types, right? So the idea being all the way from A to Z for the borrower. So there wasn't an actual product I couldn't deliver on outside of commercial, right? Anything resi, we'd be able to. So the team teases me that I must have abandonment issues because I don't want my borrowers to ever leave.
Right.
I'm like, they can't leave. They have to. Exactly.
Yeah.
They have to stay. So we have to produce products that work for them.
And so let's talk about that real quick. So comparatively speaking, and I knew this about you guys, but for our audience, the big difference maker for you was capturing that capital partner, the institutional capital partner. And that allowed you to have all these different verticals. Now, this is confirmed the verticals. We're doing all the above in residential and business purpose. We're doing fix and flip, construction, rental, bridge. But this is all business purpose, right? We're not doing anything on the consumer side.
No, nothing on consumer.
So it's kind of aside from the advent of rental, which is kind of term rental is kind of a newer thing, all the core food groups, though, translate back to your experience at Genesis.
Correct.
Now, you guys chose to go national right away. Because I remember that phone call and Nima and I talking about it, like they're going national right away. Okay, they're serious. Talk about that really quick. How did that planning begin? Because, as an entrepreneur, I know all my clients are entrepreneurs, and a lot of times it's, all right, let's do this. And then they kind of add bites at a time, right? And they kind of take on what they can handle. Taking on a national project like that is very daunting. And getting licenses in all the states you need to, brick and mortar set up, staff, LOs, that requires a lot of planning. Talk to me about the planning phase for the Aureus launch.
We did for about a year. So
about
it
a
was
year?
a good
That's
year.
not that long.
Yeah, it was a good year. We got all the licenses in place.
So that was during that 1 year? Okay.
We did the 1 year. We self-funded. So we wanted to make sure that we were up and running, testing the market. We went out and did it ourselves, right? We wanted to be a borrower on the other side of the table, see what was working, what wasn't. We went out as far as, buying lots.
Hold on. So you were the borrower on your own deals?
Not with Aureus. We just became,
So you wanted to test the market.
We would test the market.
From a borrower's perspective.
Exactly.
That's actually a novel concept. So you said, all right, well, I was the lender for X amount of years. Let's see what this industry is like now.
Right.
And it's become a customer.
Correct. And
That's
I had never
really
been
cool.
a customer.
Right.
And so I wanted to be a customer on the toughest product types, right? So let me be a customer in different states, not California, that I'm used to.
Right.
So I did that. I wanted to, as a rental market client, as a bridge client, then went out during COVID and went and bought lots, like actually walked lots.
You went and did it?
Yeah, walked lots. and
How
that
about
was
focus
fun.
grouping? I mean, that's,
right?
Yeah.
We had to just go out and do it. So walk lots. I was going to do like 15 lots. I ended with 900.
Okay.
Because, that's normal, right?
I feel like I've gotten to know you pretty well now, and that makes sense for you. But I think our audience will understand by the end of this episode, at least, that you don't do anything half baked, and you just jump in head first.
Yep.
So you took the role of the borrower.
Right.
You jump in head first, and then what did you discover? Actually, I want to ask you about that.
I discovered that it was. Well, first of all, it was amazing that there's so much capital in this space now, and it's a thing, and it's an actual asset class, and it runs like a machine. So to me, that was so rewarding and so just inspiring on another level. On a personal level, it was just really rewarding, right? But then I realized, my God, if I'm the borrower, it's kind of messy, meaning it's going to cost me more money because I have to send this product type to this group, this to this group. So it's a bit scattered, a little fragmented, and I'm an organizer. I can't help it. I want to bring it all together and make it easy, make it cost effective, right? So I definitely realized that. I realized the same types of things that we've all worked through, like efficiency, execution, speed of execution, certainty of execution, especially in looking at the market where it is today. I felt that we were going down this path, right? So looking at it from the perspective of rates are going to go up, 2 years ago or whatever, thinking that it would be where we are today. I wanted to make sure that borrowers never felt like they were going to be left at the altar, right? That they weren't going to be retraded. They weren't going to have to deal with the fluctuation in the marketplace, meaning that we could be that trusted partner. And I experienced that on the flip side, right? So kind of like, it was very helpful to do that. So we did that for a good year. And we developed the product types. We wanted to make sure that we could make it simple, that we weren't coming across to the borrower as just a lender. We wanted to come across as a lender that really provided value add in different areas and that we knew the market. So, you know, it was going and getting out there and staying in an area in a market for 3 weeks and taking my kids and the dog and the nanny and going out there and really getting to know the local markets, understanding who's
but you
doing
yourself
what.
were doing that.
Oh, yeah. Yeah.
That's interesting.
Yeah.
You weren't taking, you weren't working with other developers and just getting, asking them questions. You're out there borrowing yourself.
Right.
That's very interesting.
Right.
And so you created this decision that you want to create this sticky environment, but also this value add experience for your borrowers. But at the same time, I mean, you must have discovered the commoditization
Absolutely.
and the level of kind of standardization that came to the space, and the institutionalization lends to that. And a lot of times it requires an increased level of saying no. And as one of the more newer kind of institutionally partnered groups, it sounds like to me at least, it sounds like there's a challenging balance to have, because saying no is going to be a requirement for what you're doing. It's an absolute must in our space, but maintaining that discipline, but also how does that balance with keeping these borrowers sticky in this type of kind of inclusive environment you want to create, right? How do you guys manage that from an internal perspective?
So one of the things that I wanted to set up was the relationship piece, right?
Okay.
So my entire career has been based on relationships,
Sure.
but also taking it a step further in the relationships with the borrowers and actually going to their shops and going to their locations.
Okay.
So when you send someone there and they're able to say to them, okay, for these reasons, we need to lower the loan amount or whatever it is that we have to say no to, and explain it, it's a much softer landing for us. And it also demands a level of respect that, hey, we know what we're doing. We want to help you grow. So we have no problem saying no. It's just for us, we want to make sure that what we're saying no to is valid and that we're not missing something from having been out of the space for a while.
Okay. And I hear, I'm trying to key in on that key feature. There's two pieces. The relationship component. So that means that you actually have people on site in not just in the state, but in the city that your borrowers are, and they can go visit with them, and that's quite a staff to build out, right?
Yeah, and I've been so fortunate to have such incredible people working alongside with me that there's that level of trust and experience. So it's really interesting to see. I have past groups that I lent money to that now we work together and they help me with on-site visits and stuff. And so there's a level of, like, I've got five people today that are on the road for like close to 300 days.
Wow.
And so they love it. They're amazing at it. And so there's a different touch and feel along with brick and mortar of smaller shops, right? We've all had to adjust with a new COVID environment. Rather than having the large offices, we want to have the smaller, regional, very local boots on the ground. I've worked a lot with borrowers direct, with contractors, with builders, with title reps, with escrow, everybody who touches the file, we've wanted to get to know in each individual area. So yes, it was a lot of kind of this going on.
Yeah, I mean, you're trying to effectively establish scale before even launch, really. And so let's talk about launch, because was Scottsdale the actual like kind of coming out party for you guys?
Yeah, that was our biggest one. So we had been to IMN prior, but on a very small kind of scale because we were still positioning ourselves with the capital partner.
Right. And that was after. And so Scottsdale was after you guys had formalized everything with your partner. Okay, so that was an interesting event. The highlight was meeting you guys, but it was an interesting event for us because I'm not really that in tune with the term rental market because I'm on the security side and I create funds for a living, basically. And so how you guys were capitalized back at Genesis is I still do that to this day. So but the term rental market at the time, I could tell that it was a very frothy market. We're obviously had our trials and tribulations of the past 6 months. But you guys came out, was your initial kind of foray into the market kind of that was your concentration? And we're going to concentrate on this as our kind of lead product? Because that was where we met. So I was wondering, because that was the trend.
Right.
That
was the trend. And that's the part I didn't have before, right?
Right.
I hadn't done that before. So it was like, let's make sure we have this right. Let's make sure that we experienced it from one side of the table, but let's become experts at it so that we can be the right fit for everybody on that. So that was our initial like go out to market because the rest we'd done, and then obviously build to rent and all of those things that are all kind of newer to this space. But you could throw me a mid-flight construction, it doesn't cause us to flinch. But we wanted to make sure we knew that DSCR piece really
because
well.
it's a totally different product.
Right.
And so, when you're a smaller shop just originating and selling to Wall Street, it's relatively easy to add that to your book. But when you're trying to scale before launch effectively, nationally, adding the policies, procedures, and just even the minute closing process of a term rental loan, it's a lot different. And the funding, then the moving it off the line and getting into the to wherever it's meant to be. I mean, it's a very complex process. And what I'm heading toward is kind of staffing and getting the people to move the levers of commerce, right? I mean, when you guys came out, it still is so hard to hire and find key partners. But you guys were able to add 65, you said, right? I mean, I know I met Brittany and Brittany now. I met both of them. There are two Brittany's. So I met both of them. And those ladies were with you from the days
from day one.
From day one. They've been with you since day one. And they've kept on with you. They joined you back with Aureus. But the rest of the executive team and even the LO production and back office processing and all, how did you guys fill the seats that fast?
I think when you really love what you do and you love the people, and it's more than just one thing, it's part of a greater cause, people feel that. And so I really truly did stay away. I really honored my commitment. I told you I went to Europe and did everything I could there because I was so bored,
right
and needed a challenge. But it was an honor to see that people were wanting to come back and work with me and build something great. And it's probably one of the greatest accomplishments of my entire career. More than selling the companies was having a team that is willing to go to battle with me every day and then come back a second time.
Right.
It gives me the chills. It was something that was incredible. And then people got better and better and better. And so people grew in their careers and people knew other people and people had kind of, understood the space better because now, there's a way to do things, right? We're not just making it, by the seat of our pants. And so we got very lucky. We got very fortunate. And I think that we have always been very transparent. Some people worked with me in the past. Some people were new. Some people were my competitors. It was a little bit of everybody. Some people were from auction. That the talent was just incredible. And I'd seen them, 5 years ago and thought, my God, someday I want to work with them. So it's a big honor.
Was there a certain kind of messaging? Because you get really excited. I can see the excitement and passion, not just for the industry as a whole, but also the end community that it serves. I think that's what excites you the most about what we're doing in private lending. And so in that regard, I want to ask, was that kind of the elevator pitch to bring back? I mean, these people were likely at different shops, killing it in their own right. Asking them to take a gamble and come back with you into effectively a startup. I mean,
yeah, absolutely. It doesn't get any more startup than where we've been.
So to come back in, what was the elevator pitch? I mean, was it just the housing market story, and was it the passion, or what was it? I mean, it's hard to.
It's a good question
because it's such a hard time, right? At the time, everyone had an amazing package at their firms. Like they were all everyone was killing it. And so I'm sure the Brittany's were doing quite well. And
Derek
was doing just fine. He's
Derek's
a client.
amazing.
So
Derek's amazing.
Right.
I was like, oh my God, I hope he takes my call.
Right. So, I mean, what was the pitch like? I mean, to get them on board?
It's a good question. I think just am real with them and said, hey, this is what I'm doing. Would love to work with you and explain the vision. And I think they know me well enough to know that I want to win and I want to come in and do something really special and unique, and I want to do it together. And maybe I just talked them to death. Maybe I just wore them down.
Charm them? Well,
maybe they were just like, go away.
What's that? What do you think that is? That do something different part, right? I heard stickiness earlier, and I think that's a piece of the puzzle. But from in your own words, like what's the different thing? Because right now the industry is so standardized. Kind of like shops that kind of look like Aureus, from a third party's perspective,
Right.
Kind of serve the same food groups, may concentrate on one more than the other, may be concentrated in a particular geographic, area or do better than others, maybe are cheaper, who knows, right? But like, what do you, from your own words, like, what is that difference that you are wanting to bring to the table?
So, I mean, there's so many nuances, right? And so many little pieces that we think are a big deal to us that are going to be different, that make the end result better and the experience better. But it's also really creating additional opportunities for our borrowers.
Okay.
The perfect example is with Genesis. Their problems became my problems, right? So now I'm invested emotionally on my borrowers. Were telling me at the time, hey, we don't have any REO. We are completely, having to shift our model. We have to do all these auxiliary businesses and, pest control and escrow and all these different things that are in my mind a distraction from their core business to be able to continue to have the revenue flows, right? So I kept thinking about that, more like obsessing about that. And that's what prompted me to build out the auction model. So it was forget what everyone else in the space is doing. Put my blinders on and look at what are their needs. Their needs are they need inventory. How can I be a part of that solution, right, to help them do that? And how can I make it better? So at the time, what people were going out to the courthouse steps and they have the morning of, right, to do the diligence and the wads of cashier's checks and. Wasn't good for the hair. I'm not going to stand out there in the rain. So I was selfish on that piece, was not going to happen. But like realizing, okay, here we are. How can I create a better, faster solution that gives more time for diligence, right? And when we first started, it was like 15 days of diligence, which is much larger now. But at that time, that's a big difference, 15 days versus 4 hours, right? Now you can actually do the required work needed, providing a lot of the documents up front, all these little nuances. And it's the same type of mentality, the same type of thinking that we have today. So Aureus is the beginning of something that I think is going to be really unique and special in the marketplace, that is always geared towards how can we improve the borrower's revenue and cash position, right? Because we want them to go out and buy more and grow their models and create jobs in the US. That's a really big deal to us, right? But also, how can we be that solution for them throughout the entire process? So that being said, we don't limit ourselves in any of our thinking. We really want to understand where the challenges are and how can we be a part of the solution.
But that requires some a level of entrepreneurialism and creative thinking that is kind of, I honestly say, I kind of miss it in this industry right now. And I think a lot of it has to do with the institution. So, I mean, how does your capital partner, your institutional partner, feel about that level of kind of like, I guess, entrepreneurialism and value add? Because if it's not usually, right? Most institutional investors right now, it's not within the box. If I can't securitize this, if I can't sell it to a pension fund, it's dead to me.
Right.
Is that, I mean, I don't know, like, how did you guys bridge that gap with them?
It took me a year to find the right capital partner that understood me, right, and the vision. And I have to tell you, they're excited about it. They're excited about it because they don't need to call and motivate me any day of the week and be like, hey, Trix, do your job. No way. It's me going the other way saying, hey, I want to build out A, B, C, and D. And so we have, strategic plans in place to be able to do that. But they're 100% the perfect partner for me and for what I'm trying to accomplish and for what the team and I are doing on a day-to-day. So it's really exciting, but it did take, and listen, it wasn't easy to self-fund for a year and write that check every month and be like, have I been out of the game for so long that did it change so much? So we took a gamble on ourselves. So they are
a lot of meetings,
and a lot of
like, what do you call it? Not humiliation, but kind of like having to do a little bit of that dog and pony show with them.
A lot of
it's
that.
Never fun.
And then reading between the lines of like, well, what is their initiative? What are they really after, right? Because we all start off here, but where does it end here? And
if they can only just be more direct, right? Yeah, just say no quickly.
Yeah. And I'll tell you, my capital partner during COVID was one of the only groups that I saw that doubled down. A lot of people took a step back in the marketplace. They doubled down, and I was like, oh my God, that is amazing. I love that. And I have to tell you, I had nightmares about them retrading me. I was waiting for it. Never.
Right.
Never. I'm still waiting for them to retrade me. No, I'm kidding.
Yeah. I mean, without telling the audience who they, because confidentiality is important, but like, it's important to think about like, that type of relationship, whether it be, your investors and you're smaller and you're working with high net worths or institutions or just aggregators. I mean, it's important to have someone that has built has shown that ability to double down during a crisis, which COVID's a really good example. I mean, that 5 months of just pure unadulterated chaos for our industry, at least, it's a really good kind of pedigree to show that you double down, right? So, all right, so you're hinting at it, so I want to make sure we talk about it. So let's take a step back, all right? Let's take a step back, and we had kind of touched on it a little bit. I want to get to know your story about Genesis a little bit more, because for our audience who are listening, most of them have heard of the name Genesis. For those of the listeners who are industry, have been in the industry for a while, and I mean, I feel like this industry is like dog years, because I've only been in this industry about 8 years now, and I feel like I've been in 20.
Right.
But
same.
But I remember my it was like second or third AAPL that I had went to, AAPL conference that I went to, and the only thing that everybody could talk about was that Genesis Capital had just been sold to Goldman Sachs, and it was effectively the first big institutional acquisition in the industry, and it was the first kind of like, holy crap, they're taking us serious.
Yep.
All right. So let's take a step. Let's take a little bit before that. Let's get through Genesis first. So the foundation of Genesis.
So I think the story goes back even further.
Okay.
So I think the story goes 14-year-old Trixie moving, right?
Okay.
My parents do the unthinkable and say, okay, we're moving sophomore year in high school.
Okay.
Right? Which was I was fine.
In LA or?
No, I went from LA to Camarillo. Right,
Oh,
so it
yeah,
was
yeah,
a big,
yeah,
it was
yeah,
a
yeah,
very
yeah.
big difference. So I went to school there and made it to the varsity soccer team and cheer. Two very different sports, right? And I was super excited, but each sport was $1,000, let's say.
Yeah.
So here I'm like 14 years old, got to come up with $2,000, which was a big deal, right? My family was trying to just put food on the table and figure it out. So I thought, all right, well, let me get a job. Well, it turns out at 14, you need a worker's permit. Didn't have that. And you need a ride to get to wherever you're going. So I went across, do you remember the old computer paper with the bubbles?
Yeah.
Had that, took that. My sisters, I have two younger sisters, 10 and 11 years younger than myself. I took their magic markers and made business cards, Trixie's Tutor Time. Went across the street to their school, because they were in elementary school, and went to the principal and said, hey, my name is Trixie. I have a tutoring company. I explained him what I was doing. Can you introduce me to the teachers? Swear to God, within 30 days, I was making more money than both my parents combined, cash under the table. So if the IRS finds out, I will
14
know.
years old.
14 years old. And so then I realized, my God, this is amazing. If there's a will, there's a way.
Right.
I could start teaching the 5th and 6th graders to actually help me, and I can have oversight, and I can expand to other schools. So this became a whole production. So then I said to myself, all right, well, let me go into banking, because I'm going to make myself legit. I'm going to go understand how the banking sector
you want to
works.
understand how money works.
How money works,
Okay.
how can I follow the money? And I started at Wells Fargo, and that's truly how the concept of Genesis came, because first of all, Wells Fargo didn't know what to do with me at all.
So you should like walk to a branch and say, I want to work here? Or
Yeah,
like,
I would like to be a teller.
and how old were you?
I told them, I said, I'm only 17, and they needed you to be 18. They still gave me the job. So I was very excited. But so I went, and I realized that my larger depositors were in tech, real estate, or gamblers. So I knew that the tech, I could barely turn on my phone, so that wasn't really in the cards for me. Gambling, wasn't trying to go to jail for counting cards. So real estate, let me go figure out what these groups are doing. Now, at the same time, by this point, I'd already moved. I was in school, living in a dorm, and it was really interesting going to the courthouse steps, and these groups were hiring my friends with wads of cashier's checks, right, to make these purchases at the courthouse steps. And I would say to my clients, hey, do you mind? Can I just tag along and learn? Because you're doing something that I want to learn. So I went and understood it. Then I went back, figured out how to get to the CEO at the time of Wells Fargo, and said, hey, listen, I really would like to help Wells Fargo kind of have this new division, right? This type of partnership with these developers. I explained the whole thing. Well, I was like,
what year was this? I mean, what year was this?
Oh my God, I was sophomore in college.
Oh my goodness.
Yeah, sophomore in college.
Well, you went to the CEO of Wells Fargo.
Yeah, he thought I was there to babysit his kids. He was like, my wife will be here in 10 minutes for you to take the kids. I'm like, okay, that's awesome. And I sat down and kept telling him. I don't even know how I got the meeting. Anyway, Years later, we've talked about it since, so it was pretty
There
cute.
you go.
Long story short, what I heard was that's a great idea, but we Wells Fargo can't do that because that's not conventional lending.
No bank
can't do it.
Still to this day.
Right.
Yeah.
So I heard go build it yourself.
Right.
That's what I heard. I don't think that's really what he said, but that's what I heard. So I said, you're right.
That's a similar trend with you.
That's what I heard. And I'm like, you're right. I'm going to do that. So I decided to open a mortgage shop, and that would be like my bread and butter, so to speak, till I graduated from college. Yeah. And do that, and then set up.
So you opened a hard money lending shop in college?
Don't tell. So it was, fractionalized lending. Today we call it crowdfunding. It was like, going to high net worth individuals, and you give me 100, that person 100. We're, old
I'm
school.
very familiar with the model.
Yeah.
I educate our listeners and also our clients on the core capital structures in the private lending space. It hasn't changed.
Yep.
That's still like the fundamental baseline, getting started, kind of strategy. So this is when
really
was this? I mean, this is pre-recession.
Yeah, this was like 2000, 2001, 2002 that I
very
started
early.
doing this.
Yeah, very
early.
So this is pre-Dodd-Frank, pre-regulation. At the time, it was easy to get loans. Mm-hmm. It was not as much, ATR wasn't a thing.
Right.
But it was still, banks were still very conventional. This was kind of a sub-industry that was barely a thing. Fix and flip was barely a thing.
Right.
Auction buying was still, and speculating was still a very popular topic at the time. But there was no money to be had from a capital source, that even remotely even looked like a financial institution. It was all kind of just retirees funding stuff.
Right.
So the initial mandate was for you is, I like this type of product. There's an opportunity here.
I'm going to go do it.
I'm going to go do it. So how did that evolve?
I was too young to raise real money, and I could see that. I'm like, all right, step number one, graduate from college first. Like, get out of living in a dorm.
Get a degree. Yeah.
So the challenge was, the blessing and the curse was I was doing it all. I was a processor, the underwriter, the doctor, you name it, I was doing it.
Right.
Because I wanted to learn it. And then it was, okay, how do we put this together on a larger scale, and how do I raise money and overcome that? So, Brittany Fairweather was my first employee. I think I started to tell you the story. She was 14 years old, and she came to my brother's shop. He actually used to run gyms at the time, and she wanted a job, and I happened to be there, and she was going to the prom. She needed to buy a prom dress. And I said, wait a second. Why are you going to the prom at 14? Like, wait. Who's this boy? Where's your mom? What's happening, right? So she was my first employee. So if you can imagine, my phones were answered from 3 o'clock on. And then we started to get busy, so she hired her best friend, also Brittany Starkey. So then when one of them got the school play, the other one was there. So this was my dream team. I hired my nephew to be my videographer. So this is like Matterport or anything. This was like back in the day. So he would take his pit bull and he would drive around and he'd take pictures for me and video. And that's how I would look at some of these houses when I couldn't get to 15 places at the same time. So this was my dream team. This was my dream team, along with, like, my nephew had a date one Friday, so he hired an intern. So this is how we built it. So when people say, did you bootstrap it? Are you kidding? I had a homeless guy that would rob me every Friday for whatever reason.
Do you have an office?
Oh, yeah, this was in Thousand Oaks. I was starting to, like, get legit. So my brother, the big workout guy, would come and walk me to my car on Fridays.
Security, yeah.
Because I was going to get robbed, and I'd offer the guy a job every Friday, the homeless guy.
Well, it turned into an opportunity. I mean, that's just crazy because, like, it's so funny to think about. I love these stories because we've heard these from other people before, but never to this degree. Because, like, it always kind of for a lot of our audience, our guests, it always kind of started out as kind of a hobby, as a side investment, and then they turned it into a legitimate practice. And they've got this crazy pedigree of having worked in, some of them have worked like with Steve Jobs, like different institutions, this or all that. But this is so different, and I love this. It's literally a college kid figuring out there's an opportunity. It's also unique because, like, when I was in college, I wasn't thinking about, like, how can I make money and how can I make a business. I was thinking about, where am I going to go buy some beer?
I thought about that too.
But, like, So there's the initial bootstrap, and that's so awesome, and it's such a cool story that you guys built that out. And how How did that start becoming to that big first milestone? How about the big first milestone for Genesis?
It took a while because, we did the whole mortgage conventional lending to like keep the lights on, so to speak. Because I, at that point, like getting a PPM before meeting you, that was like $100,000, let's say. I had to write a check. So it was, figuring out how to do that. So I launched Genesis. I think we formed the entity in like 2007, launched it 2008, and then Madoff happens, right? So then the downturn starts to happen. So now you're raising money. So at this point, I had already gone, friends and family. Yeah. I told you were my family. I told you my friends were in college. So that was out.
It's tough.
High net worth individuals, family offices. I graduated to like the first 30 million, right? But my demand, because I was out there originating, I was out there meeting with all of these groups, understanding their model. My team and I understood it sometimes better than they did. So we were like, no, work the math the other way, right? And so it was talking about a product on a mass scale when a product they didn't even know they needed, right? Because these developers and flippers were using their own cash. Yeah. Or they had friends and family money. So they didn't really understand
the cost of that capital.
Exactly. So kind of working it backwards that way was really beneficial. So it was kind of creating the need for ourselves. Right. So kind of doing that piece really taught us the business, all of us. So we've been in the trenches together for a long time. And then we got, we started to get larger and larger. And then, we got some of our competitors. We started to realize that they had, some real teeth. And so we made some.
Who were some of your competitors at the time?
At the time was mainly Anchor.
That's about right. That's about right.
It was Anchor that was the main group, and
timelines match up. Robert Wasman.
We were able to bring him over, and so that was really great because now you had he and I that both wanted to go out and originate and light the world on fire. So that was great, and we were able to talk to Oak Tree, and so Wells Fargo was actually the ones that introduced me to Oak Tree.
So that ask actually produced some fruit.
It really did, and they were actually the ones that represented me on the sale at the sale to Goldman.
Oh,
so
that's
Wells
cool.
has been with me near and dear to my heart forever. But so we were able to get Oak Tree. They were the first in the space to take a gamble. They gave me my first $250 million equity. That hadn't been done before.
So you had some institutional exposure pretty early then. I mean, Oak Tree was one of the early institutions to jump into the space and saw the opportunity.
Absolutely.
They had placed the 3 different groups at the time. You guys were one of them, and they were like, "We believe in this product."
Yep. I think we were the first that they did
it with. You were the first,
yeah.
And they did a few others over the years. And we recently saw kind of like this M&A timeline. And I was going to use it as a slide when we had a panel, but it didn't belong to me, and I felt bad using it. But like, it was this like timeline, and it showed in the early stages, pre-2015, was all these allocations by Oak Tree. And so they had provided you a lower cost of capital, a larger ticket size. So did that take you guys to the household name?
Yeah,
was that it?
That was it. Okay. Having Oak Tree took us to that next level. We would have never been able to have done it just on our own without them. We needed to not have to go back to the well, right? So we did. This was pre-securitizations and bridge. Yeah. This was like, okay, go find how to create leverage facilities.
Back then, credit lines were starting to be explored.
Right.
Warehouse lines were kind of a thing. There were some banks doing it. It wasn't well thought out.
Right.
And it is today, but back then it wasn't. They didn't quite understand the short-term product. And so do you guys also get leverage at that point? Wow.
So we went out and we're these people that I want to do it all myself first and make sure I do it right. And somewhere in there I started the auction company too, pre-Oak Tree. Yeah. So it was also navigating that world and understanding the default space and understanding the liquidation strategies that the banks and servicers had.
Which was a high demand strategy back then.
Demand.
It was the means of this industry feeding.
Yep.
I mean, it was what everyone did.
Yep.
And to this day, there are still lenders who, in certain markets, who still do the whole courthouse step marketing, and
absolutely,
and they'll draw checks on the spot and stuff like that. I mean, but that's a far. I mean, what I'm hearing is a very big contrast to kind of like that. By the time Genesis had sold, right, and those kind of 3 or 4 years before that, you guys had really become. You were the shop. Like
we grew.
when I first joined this industry as an attorney, I had asked the partner I was working for, and his name is Tony, not Anthony, but Tony, and I asked him who are kind of the big shops in this space, and there were like 3 or 4. They were all kind of West Coast operations, and you guys were one of them. And at the time, it was kind of like I think it was like you, and like Lone Oak, Anchor, and a few other shops. One big difference though back then was we kind of did a little bit of everything back then. Everyone did a little bit of everything. Rental wasn't a thing, but like commercial was a thing back then too. And was it that the same, or were you guys purely resi?
We were resi.
You just
We're
did
always
only,
just in resi.
and auction primarily was driven through
All resi.
Okay. Okay. So let's talk about the add-on of auction then, because it wasn't auction at the time. It was
Genesis
Auctions, and then that became
then it became Hudson Marshall.
Hudson Marshall. I always get mixed up. Hudson Marshall. And so was that added early on as kind of like, okay, we need this inventory component for our borrowers. We need to have an auction management solution for them, or was it later towards when we kind of got to that institutional stage after Oaktree I jumped in?
No, it was pre-Oaktree.
Okay.
It was pre-Oaktree. It was how can I help solve this problem, right? So
value add.
How can I create the value add for the borrowers?
Fascinating.
So because, hey, I can only lend you X amount because that's all I have.
Yeah.
And I need to charge you Y. Let's
Yeah.
not talk about that, right?
Yeah.
So I needed to have a differentiator in the space that was a value add to them. And so we were just determined to go out and do it. And, we understood real estate and we understood lending, so we knew we could help the banks and servicers understand what they had on their books and how to facilitate that moving all the way through the chain, right? So it was a race to the finish line on that business, and so we got Oaktree, and so both companies started to grow. Both companies really got to a point where I'll never forget. We were on the 17th floor in an office in Woodland Hills, and it was like roller skating basically throughout the office. Part of it was the auction company here, and then lending over here, and so we never lost the touch, right? And never lost the touch of being in it with the team, with the borrowers, really understanding the marketplace and saying, let me go figure it out. And same as now, let me go actually there and talk to the people and understand what is happening and how we can protect ourselves and protect them. So it was never a conversation of, hey, you said no to me and I'm upset. It was, you're right, you caught something I may have missed. So that was always a perspective. It was relationship building, coming back into the space and seeing how so many of these groups, when we first started out, they were amazing, but now they're phenomenal, right?
Yeah.
They've created generational wealth that is unheard of.
Yeah.
So
the guys who flipped their first house in 2002 are now like billions of, it's crazy right now. Yeah. So. I mean, but translating that story to sale though, I mean, it was not a discussion topic at the time. No one was really thinking about, even your competitors at the time. I had interviewed, Steve Pollack as he's one of our inaugural guests. Like he was about to retire, and I wanted to make sure we interviewed him. And even him, like in 2015, he wasn't really thinking about sale. He was trying to get his cost capital down.
Right.
And there were a couple other companies that had contemplated it. I think Colony was one of the stories out there. But you guys were the first one to get one of the biggest institutions out there to buy the company. How about that process real quick? I mean, it must have been really, a couple of years of diligence. What was that like?
It was a lot, and it was a lot because at some point prior to that, the companies both got so big that I had to be able to put others and position them to be able to do what I was doing, right?
Sure.
So being like this, like I got to do it right, I would put two people and, as co-whatever,
Yeah.
co-COO, co-CEO, whatever it was.
So you had already taken a step away from Genesis Capital.
And so I was overseeing it and on the board, all of those things, but it had gotten to a level where it was a machine, right? And so then I was able to focus on auction, and that's the company that needed me at the time on the day-to-day in the trenches.
Okay.
So positioning it that way was really helpful, but the goal was to monetize it, and Oaktree obviously was incredibly helpful.
And
with
they
that.
assisted you tell the story.
Absolutely.
Because M&A is all about that, right? M&A is all about being able to tell the story in the right way to bridge the gap to an institution who speaks a different language.
Right.
They can understand the financials all day long, but if they don't understand the story in their own parlance, right? So like, how did that work?
Well, I had a lot of practice with Oaktree. They were really great teachers, right? In that how to do the entire thing in this with the finesse that they're used to seeing and looking at things in the institutional way. That was always a big goal of mine, was always to create this synergistic view between both, because to your point, it was a little bit more of the Wild West back then, which would then impact the borrowers, right? Because they're looking at it, they're raising equity, which is really hard to do in general, much more even then at the time. Yeah. So they're having to do all these dog and pony shows on the daily, right? So they've got 45 LLCs, let's say, with 45 different investors, which just creates more of a headache for them. And so it was, how can I help institutionalize this process and make it smoother make it where they have the ability to count on when it's going to happen, it's actually going to happen, right?
And that's because you want to translate that to the institution.
Exactly.
You got to be able to translate that story to them.
Exactly.
They need systems and processes.
They needed and they needed to not treat it like a bank, right? So like you don't have 30 days to do it. You have, 2 weeks or whatever the case may be with the product type. So it was, really understanding how to get them to see that, touch, feel, and see it, and be willing to take a gamble on it, right? And to see that it is something that is incredibly lucrative. And so I think we just kind of dug in. I will tell you, for 4 years, I don't think I saw the light of day. I think I was just in the office, like everybody, morning, noon, and night, and you just put your head down and do it and make sure that it's perfect. Because at the end of the day, there is no one else to blame other than you. If it works, great. You get the pat on the back. If it doesn't, everyone's mad, right? And so it was, I put a lot of pressure on myself on that.
It's a lot of work. A lot of work and a lot of uncertainty.
Absolutely.
Because any minor misstep, any pushback, and how did you balance that? I run into this a lot when we start getting term sheets from semi or quasi-institutional companies that want to buy a small stake of the company, and the client is worried that this is going to sour the deal. It's but they don't really want. They really feel passionate about it, but they're also balancing that with I can't go back. Their XYZ hedge fund or institution. They don't care about me. We should probably give them what they want. I'm like, hold on, right? I'm as their attorney. I'm telling them, hold on, right? On your end, at the time, was there anything that was really...
on both transactions, I will tell you, I leaned on my attorneys a lot because they're experts at this. Yeah. I'm not. I wanted
they
to
do
learn.
act as a buffer.
Absolutely.
Helps. Yeah.
And I really did take with what they said to heart and would really try and learn from that because they're in it every day. To them, this is a normal course of action. To me, it's like, oh my God, this is the biggest thing. But I mean, just having done the personal sacrifices that an entrepreneur does, I can only speak for myself. I can tell you as a woman in this space, I waited on having kids even because Genesis companies were my babies. That was all that it was. My focus was 100%. So in my mind and in my timeline, it was, okay, putting it all in at this point to be able to create something that is so built on passion and dedication that it is right and that an institution would want to buy it.
And the story was translated so they could understand it.
Right, exactly.
So you mentioned so there was 2 sales then. It wasn't just a one package sale.
Yeah, it was
Goldman just didn't buy everything.
No, I sold Hudson Marshall to Fidelity 9 months prior to the Goldman sale happening. So I did that one, myself and Brittany Starkey, and we had Shepard Mull and David Sands that helped us, and we did that one in record time in 4 months.
4 months?
4 months.
A 4-month close?
Yeah,
That's
4 months
unheard
close,
of. Yeah.
And it was completely under wraps, so it was like news to everyone.
Quiet. Yeah,
it was a great experience.
So I mean, so now in the afterglow, after everything's done, you're still working for the company. You're still on board. You're on the board. Or are you done? Are you walked away?
I'm done entirely.
So after the sales happen, you're off of something, which is also rare. I mean, we talked about that on the panel. It's like a very rare instance to see a founder being able to wash their hands completely.
Yeah, it was very bittersweet.
I bet. I mean, this is your
really
baby.
Hard. It was just like that, and especially because I had to transition earlier than the sale. So it's one thing if you're like, okay, I'm going into a sale. I know I'm going into a sale, and that's it. This was a gamble of like, I hope that I did a good enough job that the rest of the world can see what I'm trying to showcase, right? So that was
because you really it was the first instance.
Yeah. It was really like just
and everyone's looking at you,
and so it was bittersweet, and it was it was hard. It was like sending off your kid to college or something like that. It was really tough because that's all you've known for 10 plus years of your life. It's what you eat, breathe, and sleep. Yeah. So on the other one, I stayed on with Hudson Marshall, and it was great, and I did all of that, which was a wonderful experience. That was the first time I ever ran a company where it was someone else's money and not mine.
You had a boss.
What is happening?
You had a boss now,
exactly,
right? Yeah, it's different.
It was totally different. It's an amazing experience, and kind of went through did my obligations, fulfilled my obligations, and then. And
I want to make sure everyone understands that, like NDAs and non-competes are part of the story. You have to accept that. And you have to negotiate. I mean, yours were pretty long. They were
long and they were rough. And they were.
I mean, your counterparty is Goldman Sachs. They're going to hit you hard with that one.
Exactly. And I would listen. They honored their word. I honored mine, and it was it was great. So
you after you left the company, a couple years off. How many years off actually?
almost 4.
4 years off.
Almost 4.
Like I said, dog years. That's like in this industry, it's like dog years. 4 years, a lot happened in those 4 years.
Because my son is going to be 4 in August. So
you had your son right after you.
Yeah.
So,
the first.
I mean, you told me this privately. You went over to Europe.
Yeah.
And started all over again, doing more. You couldn't rest. This is like you had all these years. You had from sophomore year of high school all the way up till here. You've been working, building, right. And knowing you're in it.
Yep.
Because you have that. You got to know it, right? Mm-hmm. You couldn't take a break.
I couldn't take it. So I tried, and it lasted like a weekend. And then Monday, I started driving to the office, and I'm like, oh wait, I'm supposed to go to yoga. What?
Yeah. So you went to Europe, and
and I learned. I tried to challenge myself and understand what everything looked like there, how it worked in the different countries, what it was like to be on the commercial side, on the hotel side, on all sides. Yeah, so that was really fun, and I really never went to Europe till I didn't travel at all. I was working till my mid-30s or whatever. So it was okay, this is what sunlight looks like, right? And so it was great, but it was constantly this passion of mine to
still real estate related over there?
Yeah, all real estate related. Okay. Mm-hmm. And it was just me doing like personal investments and teaming up with other groups and understanding how the other lenders did it out there. What can I learn from them? Mm-hmm. How can they were looking at volumes that were huge numbers, huge. They were looking at a demand of 500 million a week. How did they underwrite all that? How did they process all that? So really I'll never forget going to one of the shops and just talking to them, and they were friends of mine, and they were like, hey, if you want us to send a car for you to take you shopping, like get out of our office, right? We can. I'm like, no, I'm good. I'll stay here.
What countries were you at?
I was in 13, 14 countries. What? Yeah, it was a lot of fun. It was super fun. It was amazing. I got to practice my Spanish in Spain. So yeah, it was an amazing experience, but obviously I wanted to come back to America. And
to the tail end of this trip, in this mission in Europe, was there a signal that you'd be freed of your non-competes, or how did that work? Like you knew this is my opportunity to come back, or were they telling you, okay, it's now coming up?
Oh no, I knew. I had like the date highlighted
on your calendar.
Oh yeah. No, I knew on both.
Coming back to the country.
On both, yeah. All right. Knew. And I wanted to have both of my sons and stuff, so I knew exactly on that piece.
Oh man.
So, yeah, it was a really amazing experience. But I have to tell you, like it all went back to passion, and for me, it was, how do I help create jobs? How do I create housing opportunities in America? Like, I'm so grateful to be in this country. I need to earn my keep, right? I have to add value.
Right.
And so it was, how do we get in there and really create an environment where we can help facilitate that? So
you had that experience contrasting the real estate markets and the job creation and the different types of approaches in real estate. Mm-hmm. How does the U.S. market contrast, like to the European markets? Is it because you're kind of like applying a sense of a little bit more of an entrepreneurial spirit and a lot more of a kind of bootstrapping perspective to the U.S. side, but it's not like Europe is more corporate?
Yeah, for sure. Absolutely. More corporate. It's
more government run?
Yeah, and every country's different, right? Here, across all of our states, you have the same governing agencies. It's still all very consistent, where it's very different in Europe. At least I found it to be different for me.
Even with the EU, it's very fractured.
Even with the transactions, like MLS, for example, things like that. We have where all 50 states use it, right? And so it's very different. I also looked at Mexico and different opportunities there. So it was definitely a great experience for me to understand how the rest of the world does it and what am I missing and how can I learn? I am the person that goes to dinner and has her notebook out and says, do you mind if I take notes? And we'll sit there and write it out. So
you felt the need to come back. You knew that you were going to come back.
Oh, for sure.
And so I want to pick your brain on this, because we ask all of our guests this, but it's a different perspective, because you've really been part of the formation of this industry. Really, it's evolved so much. You left, you came back. I mean, you must have been shocked when you came back.
Completely, speechless, shocked.
So what about it surprised? Let's talk about specifically, what about the industry shocked you when you came back?
It's so good.
It's so strong.
It's so strong.
Okay.
It's amazing.
Okay.
I mean, we're talking about for years and years and years, people don't understand what I was talking about. Mm-hmm. They were like, "You do what? Yeah. How? When? What?"
Right.
And now it was
hard
like,
money. That's loan sharking.
Exactly.
Yeah.
And so, coming back and seeing how efficient it is was so just incredible. It was really incredible. Not to say there isn't still opportunities of improvement. There always is, especially I think when you know it from the beginning and the ground up, you can see where we can improve. But it was incredible to see its efficiency, the velocity of which it is going. How tech has come into it and data, right? So being an entrepreneur, it's always a struggle of like gut and data, right? So like usually it's the entrepreneur and myself saying, hey, let's go charge and then backfill the data versus now I wanted to like combine the two, right? And really move accordingly. And it's, I feel like the industry has done that. And so I think the institutional players have come in and in many ways made it more of a formalized process.
They forced it. They forced us to really, and that, I mean, we're a byproduct, Dross is a byproduct of that. We've grown immensely because of the standardization and institutionalization, and we're a middle market player. I mean, from your perspective though, I mean, it must have been challenging coming back because like, you're the, early stage person that sold their company, walked away, came back, and I mean, in the past year or so, has there been any challenge? Like, she doesn't know what she's talking about. Industry's a different industry now. We're totally different now. Is there any challenges there?
If they think it, they don't say it. No, I haven't.
You're too nice for them to say it to you. Yeah.
I haven't had that at all.
That's good.
But I think it's because we did spend some time really understanding and learning. So it's always like my philosophy in life has always been, hey, if you're the smartest person in the room, you're in the wrong room. And that's truly that I live by that code because I want to constantly learn and in turn make my team constantly have those opportunities to learn and to grow themselves personally and as a company, right? So no, we didn't experience that because we came in with a very open mind to what is different and how can we be a part of it.
So a level of humility too.
Absolutely. I was behind the scenes the whole time.
Right.
I never came out and said, hey, I am Genesis or I am auctions or I am this or
That's
anything.
true.
I was always behind the scenes per contractual agreements and per the way that it needed to be at the industry at that mark. And I didn't do it for that. Like I did it because I love it and I love all of it.
I hope you're enjoying this episode so far. Private lenders, let me tell you about the most reliable and robust software to service and originate your loans. The Mortgage Office is used by the most reputable and experienced private lenders across the country and abroad. It has been the industry leader in loan management software for over 40 years. Recently, they launched a fully web-based origination platform, and they'll soon be launching a fully web-based servicing platform as well. The Mortgage Office is also SOC 2 compliant to make sure you and your customers' data is safe. Recently, they've launched the ARM module. It's second to none. It automatically ties to indexes, support ceilings, floors, initial and periodic rate caps, carryovers, and negative amortization. TMO's revolutionary approach to lending software changed the industry forever, and they continue to be the cutting-edge technology provider in their trusted development. Enhance your communication, provide transparency, and automate your back office today with the Mortgage Office, the ultimate lending software. So I want to kind of break out our crystal balls a little bit because you've been through a couple cycles. I mean, we have these like minor cycles in our space, and kind of COVID was one of the indicators. I think we had the Fed meeting today. You guys just got back from a big term rental conference in Miami, the big SFR East show. And I'd like to get your thoughts on kind of where we're headed as an industry from a kind of national macro perspective, because it is a weird time.
Yeah.
Mortgage rates are climbing. Fed rate is climbing. I mean, mortgage rates at its record high. We hit sixes recently. Term rental of the past 6 months has had massive volatility. I'm sure everybody was affected by it. And I don't know how you guys fared the past 6 months, if it affected you negatively or not. But one of the things I like to ask is like kind of perspective where we're headed, because we saw a lot of people think that the volatility is behind us. Where do you think we're headed, and what are you guys working on to make sure that you can kind of stem that tide and you're here for the long haul?
Absolutely. So I think having had only us to rely on ourselves, right? You look at the world a little bit differently, and you always expect the other shoe to drop.
Yeah.
In this case, it's not that I expect the shoe to drop. It's that we really feel that rates are going to go up, and we know what's going to happen. It's coming.
Yeah.
We know. We all just have to prepare for it.
Yeah.
And I think it's just get lean, right? Get lean on it. Watch expenses, look at the growth trajectories, really looking at the normal business practices that one would look at, but really understanding how that's going to impact the space. So when I look at it and when we talk about it collectively as a team, we look at how do we get in front of it, right? So like deliver bad news quickly, right? That's
Okay.
always the model. Like we're not going to like string our clients around and I think I can, I hope I can. No, it's
No ostriches.
no,
Yeah,
absolutely. Like
yeah.
just get to it because we're all business people
Yeah.
and we can recover from whatever it is. I do think there's going to be a lot of opportunity. I see it now. I think that, I think it's going to come down to a few major points. One being the capital partners, right? Because I think
Can they withstand this?
can they withstand
Yeah.
it? Do they have the stomach for it? Do they have a bigger vision, right? Or how limiting is that? I think a lot of like where we rely on you guys for help too is a lot of the like local state level legislation that's coming down. I think that's a factor that I didn't have that to deal with before, right?
Yeah,
This
yeah.
wasn't looked at. Nobody even knew who we were, right?
Yeah.
It didn't matter. So now that's something definitely to factor in. And,
Yeah.
and I think that we all have to kind of team together for that and to be able to respond to that and get in front of that. But I see opportunity. I see that, I'm really trying to build out like a broker piece as well, because that's something new to me. I always went borrow direct, but I think that's a broker community is incredibly strong and is going to need good debt partners that they can rely on for their clients, right? My view is different than other people. I think that the client always needs an advocate and they should have it if they would like it.
That begs the question, though, because that was the kind of the theme for the show. You guys are working with your partners and your borrowers as partners. You're trying to be as helpful as possible to make their dreams come true effectively and their business work. But at the same time, when you're going third-party origination and you have brokers and other originators coming to you, it becomes a little bit of a challenging exercise because it's very hard to very hard to convey discipline when you're not direct to the borrower. I feel like if you're direct to the borrower, you can kind of help them there. But now you've got another layer to deal with. What are you guys doing to make sure, and even with your borrowers as well, like how are you guys preparing to instill that level of discipline with your counterparty? Because it's so hard.
So hard. So it's so funny because when I was thinking about this, I want to say 2 months ago, the hardest challenge for me was exactly what you just articulated. Like, forget everything else coming back to this. There was no hesitancy on my part.
You got to tell them to eat the vegetables. It
exactly.
Sucks.
It's like, wait a second, you want me to let go and wait, what? You know? So that has been a huge, for me personally, it's all relationships and I want to understand who I'm dealing with, right? Who's on the other side of the table. So it's really just leaning on the broker's expertise and really understanding from my side of the table that I can't be all things to all people. And that's just has to be okay, right? And so, but that is a new world for me, for sure. It's a completely new world and I'm still navigating through it.
Sure.
But there's a lot of trust in our broker partners, right? So it's an interesting type of selectivity.
I was going to ask about that. Like a selective process must be very iterative. Okay. All right, cool.
And I learn a lot from, anyone that has more local knowledge than I do. I think it's incredible. So I love to just really try and listen and learn.
That is important. I mean, that's why TPO does work well, because you have local concentration. All right. Well, we're running out of time. We forgot to ask our kind of, because lightning round questions, and you already answered one of them. First job was Trixie Suitor time, so we have that answer on your first job. The next question is going to be about this, and if you're not out there just dominating the industry and lending world and getting out there and building businesses, what would you be doing?
Funding other entrepreneurs.
Really?
100%. I did that while I was
like a venture partner.
Absolutely, like my own little Shark Tank with my it was really fun and it's amazing. So I've got several that I've worked with, and it's been an incredible experience.
Very cool.
Yeah, to get to help them build their dreams.
That's awesome. And I know you talked about it at one time. So you're actively right now, it's like acting as a venture partner. That's very cool.
I love it.
Very cool. All right, so one last question, and that has to do, I'm going to make sure I get it on here because I don't want to mess it up. All right, so... All right, so what business tool can you not live without, right? Because you said cell phones aren't really your thing, you're not really a tech person. Is there a business tool that you just have to have in your day-to-day?
My phone, but if it was up to me, I would be on my BlackBerry.
You missed your BlackBerry?
I missed my BlackBerry because I could type under the table because I had the keys memorized.
Yeah. A lot of that's. I remember the BlackBerries, and it's funny because there's talk about coming back, and there are still some folks out there. There's one of our old guests. I remember seeing him at a conference. He still has a BlackBerry. He's like, I can't let go of it.
Yeah,
I need the keyboard.
I need it. The other thing I cannot live without, absolutely cannot, is my Post-it notes.
Oh, so you're a Post-it note person.
I am a Post-it note person, and it's super annoying. And I have like my Post-it note list of things to do, and I cannot live without it.
So you're a journal, handwriting.
Yep.
Very good.
And then that way I don't forget. But I cannot, like, it, I would feel like I'm sitting on my hands.
It's old school. I like that.
Old school for sure.
I like that.
I'm an old soul.
All right. Well, I think that's all the time we have for this show. I want to thank you so much for joining us on the show. This episode flew by. Thank you so much for joining us. And I'm really excited to see what Aureus is going to do for the industry. And we'll see you at the next event, I think. You know, so
for sure.
And this is Kevin Kim for Lender Lounge. Another episode for you guys. Signing off. Thank you very much. Thanks for listening to Lender Lounge with Kevin Kim. I hope you enjoyed this episode as much as I did. If you did enjoy, please leave us a 5-star review on your podcast platform. And be sure to follow our show to be notified of new episodes. If you're on YouTube, don't forget to smash that like button and hit subscribe for more content from all of us here at Jurassic. Lender Lounge with Kevin Kim is available on all podcast platforms. Referrals really help us spread the word, so please send this over to someone you think might enjoy it. See you next time. This is Kevin Kim, signing off.